Hey everybody, it's Dr. Joe here on this very nice Wednesday evening. I hope the weather is good wherever you are, and we've got another great session lined up. Today we're going to talk about real estate versus stocks, and where should you actually invest. And it's going to be an interesting topic. The reason why I chose this topic was because I have a financial advisor, and he's pretty good. I mean, I've used him for a number of years. He's with a large uh, nationally recognized investment company. Do usual stuff. And so we're having a conversation some time ago. He was saying, "Well, Joe, why don't you do more in stocks? Why don't you put more of your money in stocks and mutual funds and things like that?" And I said, "Well, why don't you put all your money in real estate?" And he doesn't understand real estate. I do. I don't really understand stocks. Um, you know, and he does. And there are pros and cons of both. And just as much as I'm trying to convince him to get into real estate, he's trying to convince me to do more, get more immersed in stocks and bonds and all that kind of stuff. And I thought, it'd be a good idea to have a Wealth Wednesday where we do a comparison, not to say to you you should do this versus that, but kind of look at the pros and cons of both. And there are advantages in getting immersed in stocks, and obviously there are advantages getting immersed in real estate. So this is not a stop this, do that, or vice versa. This is just something which I think will be a good topic to discuss, and hopefully you'll find this interesting. So anyway, I hope everyone's doing well. And so, as usual, if you have any questions, please put them in the chat box, and I'll get to those questions about 20-25 minutes in the Ask Dr. Joe segment, and so on. So again, give a little shout out to Femi. Congratulations. Looks like everything's on plan for your moving with your tenant. Great. Also, kudos to Corliss and Fritz on their project. It's moving on very, very well. Very happy and very pleased with you. And also, cross my fingers for you, Charles. Hopefully, what's it called? You'll be getting your next deal, or first deal, I suppose, very, very shortly. Hopefully, your contract's accepted. And hopefully, we'll get it through ratification. We can get your project going. So, again, my goal this year is to encourage people to actually take action. It's good to watch me on Wealth Wednesdays, but I prefer that you actually pull the trigger and take action towards your financial independent goals. Because at the end of the day, that's really what we're striving for, and so on. So let's get to the question of the day, which is real estate versus stocks. Where should your investment go? And I suppose the question is, why is choosing between real estate and stocks crucial for your investment future? Why? Why is that important? And so on. So in the diverse world of investing, the choice between real estate and stocks, it really is a very important decision. There are pros and cons with both. And if your end game is to build wealth, you can build wealth in both, in both vehicles. And so the purpose I want to do today is to explore the nuanced decision that you may make, behind that decision, which go one way or the other, and hopefully help you secure a profitable and lucrative, investment path for you. So we're going to do a comparative analysis between real estate and stocks, and we're going to look at several things like market volatility. We're going to look at potential returns. We're going to look at liquidity, and we're also going to look at tax benefits associated with stocks versus real estate, and also the influence of economic cycles. Business is on the economic cycles, and I think how they play out on whether you do stocks or real estate is quite an important decision. So we're going to do that for each of those investment types, and because I think it's important to master whichever path that you're going to take, and also to diversify your portfolio and also balance your risk tolerance level, because not everyone's the same risk tolerance. I may be more prone to take more chances and risks than you are. So we're going to look at that and also look at the unique advantages of either platform. So it's important to understand the strengths and weaknesses of each, and so on. So with that said and done, let's get down to it. Let's talk about market via volatility and investment security. That's the first thing we're going to focus on. And I suppose when we talk about that topic, market volatility and investment security, the question, I suppose, is how does real estate and stocks differ in terms of market volatility and investment security? What is the difference between stocks and also real estate as it pertains to market volatility and security, investment security? So real estate and stocks offer really distinct risk profiles and security levels. Primarily, market volatility is key. Real estate typically experiences less volatility, less price fluctuations compared to stocks, providing, in theory, a more stable investment environment. I mean, real estate doesn't usually go up and down on a daily basis. The prices go up and down on a daily basis, as stocks do. I think today the inflation numbers came out, and it looks like inflation is like 3 point something%, which is higher than what people thought. And that has an impact on the stock market. Stocks went down. And so if you had a bunch of stocks, you could lose money very quickly. I think, for example, I think Donald Trump has got that new, what do you call that? New, I don't know, DJT, I think is the, I forgot his name, Trump Media Company. It came out, I think, a week ago, like 70 something dollars per share. And now it's like less than 40. So in the space of a week or two, it's gone down by 40-50%. It's very rare that real estate prices will go down by that kind of, that level in the space of a week or two. It just doesn't usually happen. So in terms of volatility, stocks definitely are more volatile compared to real estate, which tends to be a bit more. If it goes down, it tends to go down gradually, as opposed to through major, hiccups and drops and things like that. Likewise, improvements or increases tend to, go up slowly but surely, as opposed to by large, quick bursts of activity. So I said real estate tends to be a bit more, in terms of stability. It's better. There's less price fluctuations, as I said before, compared to stocks. So it's more of a stable environment. However, this stability in real estate comes with some challenges, such as property management. You're going to have to deal with tenants. You're going to have to deal with good, bad, and ugly. You're going to have to deal with finding properties. You're going to have to deal with the financing. So a lot more things that you have to go through, if you want to go the real estate route, and so on. Also, real estate has another challenge, which is liquidity. It's not as liquid as stocks. I mean, you can't just decide to sell a house today and cash out and be done with it. It's a process to sell a house. You get the place ready. You got to find a real estate agent. You got to advertise. You got to get people in there. You got to negotiate the price, put it under contract, ratify the contract. The seller or the buyer has to get financed. It's a whole bunch of stuff that takes place as part of that process in order for you to recoup your costs. So it's less liquid. Whereas in stocks, you can sell your shares today, during regular trading hours, and cash out. So so stocks tend to be a lot more liquid, and therefore, as I said before, prices can go down very quickly, but prices can also go up very quickly as well. So if you pick right and got the right stocks, then it can grow a lot faster, than real estate generally. But obviously, you got more increased exposure to market volatility, which can overall anyway affect your return, especially in the short term. So in terms of the issue which is market volatility and investment security, some of the action items that you can take in order to address, at least explore these areas are as follows. Assess your risk tolerance level. How tolerant are you for risk? Some people are more risk averse. They don't like risk, and some people are a bit more aggressive. They're okay with some risk or major risk. Okay, what are you? So you got to evaluate your comfort level with market fluctuations and your investment choices. That's an action item. Another one is to diversify your portfolio. You may want to do both. Consider holding some real estate and some stocks. I have both. I'm not all in one. I've got obviously a real estate portfolio, but I also have quite a bit of money in retirement funds and also stocks and mutual funds and things like that. So I kind of do both, but I'm more heavily into real estate because I just understand it. And sometimes the devil you know is better than the devil you don't know. Stay informed is another third action item. Regularly monitor market trends, economic indicators to make sure that you make the right informed decisions. Okay, so that's number one, market volatility and investment security. The second thing I think is important to talk about is your potential returns on investment, potential return on investment, ROI. So the question, I suppose, when we talk about ROI is this, and that question is, how do the potential returns of real estate compare to those of the stock market? How does the returns of real estate compare to those of the stock market? That's a real gray area here because it just depends on who you speak to. So when evaluating investment returns or avenues, the potential return obviously is a crucial factor for investors. They want to know, if I put X dollars in, what's the return on that money in terms of Y? And a lot of people are very much focused on that, and therefore they'll put their money in areas where they have larger returns, which is understandable. So in terms of returns, the real estate and stock market, they really offer different paths to wealth generation, and each has its own uniqueness. We kind of talked about that earlier on, and also each has its own challenges, which I talked about as well. So real estate investments obviously can provide steady income through rental yields and rents from your tenant, and also through long-term appreciation in property value. So as long as the tenants are paying, that's the big if. As long as your tenants are paying, they're taking care of your property, they're not driving you crazy, and hopefully it will stay a long time, then you can have a very reliable income stream. Now, if you have crappy tenants who aren't paying you and nonstop drama, then maybe that's not such, your returns aren't that great. And that's the reason why I focus so much on knowing who my tenants are, my customers are, who I'm trying to strive for, what are they looking for, and try to provide a product that meets their needs. And obviously over time, especially if you buy in appreciating markets, then properties prices tend to increase over time. In terms of, so these returns are a bit more predictable, and they're less susceptible to short-term market volatility. That's for real estate anyway. Making real estate really an attractive option for those people who want a more stable investment vehicle. Okay, there's less fluctuations, and if you have management in place and you got a reliable income stream in place and you bought a decent property, then your returns can be a bit more predictable and less susceptible to short-term market fluctuations. Furthermore, real estate offers some tax benefits, some really big tax benefits, such as deductions for mortgage interest, property taxes, depreciation, and these things can enhance your overall return. It's not just about cash flow. There are other things as well. There are tax benefits. There are appreciation. The property tends to increase in value over time. You can write off certain expenses since it's a business. So when you factor all that stuff together, and also leverage, your returns can be quite large, and in my opinion, much larger than stocks and so on. So conversely, anyway, the stock market can offer you, as I mentioned before, higher liquidity and the potential for significant returns on investment, especially in the short term. If you pick the right stock and you know, you cross your fingers, I suppose, and you hope for the best, then you can get some really good returns very quickly, because the markets are subject to, you know, fluctuations, and you may have a hot tip, a hot lead, and before everybody else knows, price has gone up, and you can bail out, cash out, and keep going. So there are many high growth companies, techs, you know, tech stocks, and you know, pharmaceuticals and so on, which have got some great returns. Also, stock allows for easier diversification. You can place your money over a wider sphere or of investments, whereas real estate, you know, it's harder to do so because there's just more money involved. And so you can spread your risk through diversification a lot more so in stocks over things like various sectors, investment sectors, and also over various geographies. You can do national, you can do regional, you can do international stocks and things like that. However, stock market is more sensitive to economic fluctuations, geopolitical events, and market sentiments. So presenting a higher risk of volatility. As I mentioned before, stocks can be very much more volatile because you know, information can lead to swings very quickly. So investors like you and I must weigh these factors in terms of their, you know, for their financial goals, investment timelines, and also their risk tolerance levels. Okay, so while real estate may appeal to those seeking tangible assets and passive income streams, the stock market may be better suited for those people looking for growth and diversification. So what are the action items associated with potential returns on investment? Conduct a financial analysis. Evaluate your financial goals and investment timeline to determine which investment aligns more so with your your objectives. Educate yourself. Stay informed about market trends, economic factors, tax implications, and also what's affecting stocks and investment vehicles in general. And also, you may want to consult a financial advisor. You know, these people are supposed to, anyway, be experts, and they can give you some guidance and some suggestions on which makes the most sense. And they can also help you navigate the complexities of both real estate and also in stocks. But my experience is that a lot of financial planners, they don't know anything about real estate, and so they don't understand it, and so they're not probably going to encourage you. They don't make any money anyway if you buy real estate, whereas they make money when you do stocks. So that's number two. And number three is liquidity. Let's talk about liquidity considerations between real estate and also stock. So the question, I suppose, is how does liquidity differ between real estate and stock investments, and why is that important to you as an investor? So liquidity, or the ease at which an asset can be converted into cash. That's what I mean. But when I talk about liquidity, it's how quickly can you turn your asset into cash without significantly affecting its price. I mean, I'm not talking about dumping it, but because obviously if you dump something, then you know, you may dump it at a low price. We're trying to keep the price the same, and so on. So real estate typically is less liquid because it's, you know, especially when compared to stocks, due to the longer time frames often required to sell a property, and the process it's not so straightforward. It can be quite complicated. And there are also higher transaction costs. I know that the real estate agents is kind of, you know, it used to be 6% for agents, but I think they're trying to reduce that down now due to that new settlement that's taken place. But the cost of selling a house can be quite large, anywhere from 6 to 8 to 10% of the actual total, you know, price, especially when you consider things like, you know, commissions, fees, transfer taxes, recordation taxes, you know, seller concessions, and all these other, you know, Mickey Mouse or garbage costs that you have to incur in order to sell a property. So if you sell a property quickly after you recently bought it, you may not actually make any money selling. can wipe out all any gains that you've had. So, real estate tends to be a lot more illiquid, and that can be a drawback for investors needing quick access to funds, or those folks who want to adjust their portfolios rapidly due to market changes. It's just less liquid. So conversely, stocks are known for their high liquidity, as they can be bought and sold almost instantly during the market, during market hours anyway, with relatively lower transaction costs. Also allows for you as the investor to react more swiftly to market developments and take advantage of short-term opportunities, and also to divest from underperforming assets. So if you've got a bunch of stocks that are doing not very well and you want to offload it, it's easier and quicker to offload it on stocks than it is to real estate. However, the less liquid nature of real estate can also be a benefit as well, as it insulates investors from impulse. It's because it takes longer to sell. It's not something it's not impulsive as stocks would be. You can't just wake up one day and say, I want to get rid of my portfolio. I mean, you can, but it just takes time for that to actually occur, especially during market downturns. And so it tends to be a lot more stable, and especially during times of economic uncertainty. And also, you can generate income from what's it called, rentals, as I said before, and that can be very appealing, and that can address some of the liquidity issues, i.e. the cash flow from the rental properties generates money which you can use to offset the illiquidity. So what are some of the action items associated with liquidity and liquidity considerations between real estate and stocks? Evaluate your financial needs. Assess your need for liquidity. How important is that to you? Do you need immediate access to funds? If you do, maybe real estate's not for you. Build an emergency fund. That's another action item you can do to mitigate the liquidity concern. If you've got money in an emergency fund, then you may not. At least you can tap into that rather than selling the asset in the time of crisis when you actually need money. Also, you can diversify your portfolio so you can balance your investments in real estate and stocks, and so on. So anyway, kind of halfway through the program so far, and enter your questions. You've got some questions in the chat box. I'm going to try and get to them very, very shortly. Hopefully this is informative. If you think this is pretty good, give me some thumbs up in the chat box, or in Facebook and Facebook or YouTube, and I'll appreciate any updates from you as well. So number 4 is are the tax benefits of real estate versus stocks. What are those? The question I suppose we need to ask ourselves is, what are the tax benefits of investing in real estate compared to stocks, and how can these impact your investment strategy? What are the tax benefits between stocks and real estate? So the tax implications can be quite significant, really, when making a decision, because real estate and stocks, offer distinct tax advantages and tax benefits and disadvantages. Real estate investments, offers several tax benefits that are not typically available with stocks. For example, you can deduct mortgage interest, property taxes, operating expenses, depreciation, as I mentioned, from your taxable income. So you get money from rents, and you can offset that through things like property taxes, mortgage interest deductions, depreciation, operating expenses, and things like that. You can't do that with stocks generally. So that by being able to deduct your taxes, you can kind of reduce overall tax liability, or tax burden, I suppose. Additionally, real estate can do things like 1031 exchanges, where you can defer capital gains by reinvesting the proceeds in other assets. On the other hand, stocks investments offer different tax advantages, such as favorable long-term stock investments, especially if you hold on to these stocks for over a year. And dividends from stocks also are taxable, but at a lower tax rate than, say, for example, employment income. However, stock investors do need access to the money. And unfortunately, you don't have things like depreciation, write-offs that you typically would do in real estate investors. So the choices between real estate and stocks from a tax perspective really depends on your individual financial situation and investment goals, and also the ability to use or utilize some of these specific tax advantages and so on. So what are some of the action items associated with this? They include things like, action items. I would suggest that if you talk about taxes, to consult with a tax professional, educate yourself on the tax laws, and also utilize some of these tax advantage accounts for stocks. Things like 401ks, IRAs, and other tax favorable accounts that you can do. Number 5 is the impact of real estate on cycles. So the impact of economic cycles on real estate and stocks. Let's talk about that. I suppose the question associated with that would be, how do economic cycles affect investments in real estate compared to stocks, and what strategies can investors employ to mitigate these effects? So we go through economic cycles. We all know that everything goes through cycles. And so what's the impact of these market cycles for you as a stock investor, and that's for you as a real estate investor? So economic cycles, it is what it is. They occur, and they can have tremendous or profound impacts on both real estate and stocks. But they affect the markets in different ways. So real estate markets tend to move slower than stock markets to market cycles. They do, because they just do. And value, but you're still getting rent. So although the market prices may have gone down, typically the rental income stays the same or goes up, in fact, during economic cycles. Conversely, in a booming economy, when things are looking good, real estate can experience tremendous appreciation. We went through that during the COVID, where prices shot up for many people, 10, 20, 30%, 40%. Prices went up in real estate over a very, very short period of time. So in a booming economy, there are definitely appreciation benefits with real estate. Stocks, however, they're more responsive immediately to economic cycles, with prices kind of reflecting investor sentiment, corporate earnings, and also global economic indicators. So stocks can offer substantial returns, yes, during economic expansions, but also can have abrupt declines, especially during economic downturns or market corrections. So understanding the distinct ways that economic cycles affect real estate and stocks, I think is really, really important. In fact, it's crucial in order for you to develop what I call a resilient investment strategy that can withstand market fluctuations easier. So what are some of the action items you may want to consider? Diversify your portfolio again, stay informed, keep abreast of economic indicators, market trends, and also adopt a long-term perspective. Don't get too caught up on the short term, and so on. So finally, we're going to go to number 6, which is leverage. What are the unique advantages of real estate and for long-term wealth building? So the question is, what unique advantages does real estate offer for building long-term wealth, and how can investors effectively leverage these benefits? So, real estate obviously is designed, or can be designed, for more long-term perspective. It offers both capital appreciation and also passive income through rentals. You can generate revenue, which is less commonly found in stock markets. This can provide investors with a steady income stream, which is also will grow as time goes by, as rents go up. Secondly, real estate can be leveraged. Because of that, you can allow you as the investor to put a small amount of money to buy a larger asset. So your overall returns can be quite large. And additionally, real estate offers tangible asset ownership. You actually are in control, or you can be in control. So it provides you a certain level of security and control, which is not available in stocks. I mean, I don't know if I buy stocks in IBM, I really don't own anything, just some stocks in IBM. I don't really have a say because there are probably thousands or hundreds of thousands of other stockholders as well. So my role is very negligible. So as a real estate investor, you can influence the property type and the property value through improvements that you make, and also choosing the right tenants. And so you have some more control, you have more say in terms of the outcome. As prices rise, so does property values typically, and rental income also increases as well. So I think that's about it. So let's just wrap it up for the day and go to conclusions. And so in conclusion, making informed choices for your investment future. The issue is deciding where to allocate your investment capital between real estate and stocks. It's more than just a matter of, I like this or like that. No, there's a lot of things to compare, to consider. Okay, it involves a nuanced understanding of your own financial objectives, your risk tolerance, and the time you're willing to commit to this, to managing your investments. So real estate offers the allure of tangible assets, potential passive income, and more stability over time. It appeals to investors who are comfortable with the idea of leveraging their investments and are really responsible, take more responsibility with the performance of the asset. Conversely, stocks offers more liquidity and the potential for significant returns over a shorter period of time. And it's more suited for the hands-off investor, and who are okay with the inherent volatility. Stocks allows you for easy diversification, and also the decision between investing in real estate or stocks should not be seen as a mutually exclusive. You can do both at the end of the day, and that's what I do, and that's what you may want to consider as well. So with that said, my friends, that is it for today. Hopefully this was helpful for you. Hopefully it was informative. Give me some feedback. I'm trying to up the game on my Wealth Wednesdays and have a variety of different subjects, different topics, and hopefully it'll be more engaging and interesting to you. So with that said, my friends, again, if you got some questions, please put them in the chat box and I'll get to them shortly. If you got an email, if you want to shoot me an email to joe@joeasamoah.com, and I'll do my best to try to answer it. And then finally, if you want to deep dive any particular issues, questions, problems, situations that you're experiencing and you would like for my insights, share some of my experiences over 35 years, then you can always book a one-on-one Zoom call with me. Go to joeasamoah.com, www.joeasamoah.com, and press on the link to Ask Dr. Joe. You can book a one-on-one for an hour. We can really do a deep dive into your situation, and I've done quite a few of those. I do one today, in fact. I got another one scheduled tomorrow. So they're really great sessions. It's a chance for me to engage with you, and hopefully try and solve some of the problems and challenges that many of you are experiencing on this journey to financial independence. So please book a one-on-one with me. There is a fee. It's not free. So, please feel free to go to my website and book a one-on-one with me if you so desire. So, my friends, that is it. So let's get down to Q&A. It's now 7:35. Let's have a look. What do we have here? Janitor on fire. Hey, Janitor on fire. Hope you're doing well. Amon. Good evening, Dr. Joe. Good evening, Amon. Janitor on fire. Ha, 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 ha. So smash the like button. I'm not sure what that is, but I'm sure it's good. Anzo. Is it a good idea to rent a house on which you have a personal mortgage using an LLC? Is it a good idea to rent a house on which you have a personal mortgage? So you got a house, you have a mortgage on the house, it's in your name, and you want to rent it using an LLC. So if it's in your name, then if you want to rent it using an LLC, I'm assuming you're going to either transfer title from your name to the LLC and then rent it for. I mean, there are pros and cons of doing that. Let's just get generic. If it's owned in your personal name, typically you can get better financing. You can get fixed rate 30-year, Fannie Mae, Freddie Mac type financing, which usually is harder to get with if it's owned by an LLC. So the cost of financing is usually higher on LLC. You have to go with sometimes commercial financing, and they don't always have 15 or 30-year financing. It's usually sometimes 5, 7, 10-year ARMs, adjustable rate mortgages. So it's a lot more, it's better financing in your personal name. But if you bought it in your personal name and you want to transfer a title, then you're going to have to, I think anyway, transfer the title from your personal name to your LLC. Hopefully that won't trigger a due on sale clause with your mortgage company, because technically it could be. And so it just depends on your state where you are, what the costs are. I've done it before where I bought something in my LLC and then refinanced it back into a personal name because I had better rates, and I could get 30-year mortgages and fixed rate mortgages and things like that. So it's not a bad idea, but I think you need to think it through and look at the pros and cons, and then act accordingly. Dr. Joe, how do you feel about a Section 8 house in a D neighborhood? Well, people live in D neighborhoods. People live in E neighborhoods. So people live there. So obviously, if people live there, there's a market. But what I found is that D neighborhoods, and again, nothing wrong with them. If you're just starting out, if that's where your budget is, then so be it. You got to start somewhere. And I think the first house I bought was in a D neighborhood. A D neighborhood then is not a D neighborhood today. It's now a B neighborhood over the last 30 plus years. So, neighborhoods do change over time. But given the choice, the tier 1 tenants typically would prefer to live in better neighborhoods than worse neighborhoods, because safety, and other amenities are very, very important, especially safety. And so you may not get the type of safety that you're looking for, that a tier 1 family is looking for in a D neighborhood. So although you may have a beautiful house, you may not get that many applications or inquiries because people just don't want to live there. And take it from me, you need to know that before you buy it, because it's a tough lesson to find out after you bought it that you picked the wrong neighborhood, because nobody wants to go there, and the type of people that that are interested aren't the kind of people you want to rent to. So so just be wary, as they say. Good evening, Dr. Joe. Thanks for always showing up. I try, get lobster. Hope you're doing well where you are. I think you're in Phoenix, so I hope you're doing well. Ty, it seems like stocks are much more of a gamble if you don't know the market well, but I guess real estate is only good if you understand the market and choose the right tenant, as you've always say. Yeah, I mean, there's no easy street. There are pros and cons with everything. Just because I've relatively done quite well with real estate, it hasn't been an easy journey. I've made plenty of mistakes on this road, and so I'm sharing with you on the Wealth Wednesdays is a lot of my experiences, a lot of my lessons learned, the good, the bad, the ugly. So hopefully, you won't make the mistakes. So yeah, I mean, there are definitely pros and cons with stocks and real estate, and I just like real estate. I understand it. I have more control. I decide where to buy. I decide the type of financing. I decide, if I'm going to do improvements, what improvements to do. I decide, if I'm going to refinance. I decide who the tenant's going to be. I mean, I'm a lot more in control. Whereas in the stock market, I really don't have a say. You just buy a stock and hopefully everything goes okay. And so if security control is just not there with stocks, but to some people that's fine. So each to their own, as they say. Get lobster. We inherited a tenant a week ago who now wants to end the lease in June instead of September. Okay. Could you please share any tips on how to respond to this request and what all we need to consider? Okay, so you have a property and it sounds like the tenant is scheduled. The lease is supposed to end in September, but they want to leave in June. So technically, there's a couple of things you can do, I suppose. You can hold them to the lease, which means that they're breaking the lease. If they break the lease, and obviously there are consequences, I assume. They could lose their deposit. They could be, penalized, a penalty. I don't know what's in your rental agreement. So, but you do. It sounds like you have some recourse if you want to, or you may just say, look, I don't want to hold you up. If you want to leave in June, then that's fine, and you get them out. June. The good thing about June is that it's still during the summer area, so it's easier to find new tenants because more people are looking in June compared to towards the end of the year. So it should be given the choice between somebody leaving in June or somebody leaving in September, October. I'd prefer that they leave in June because it gives me a better chance to find another tenant in order to rent to. So that's just another consideration. Obviously, the worst time, especially in an area like we are, the DC area, is having vacancies around December, January, February time, because it's just harder to find people because not as many people are looking. But during the summer months, people are. So I think it depends on your situation. You can play hardball and say, you can't leave. If you do leave, you're going to be penalized. Or you can just say, hey, it's okay. Life goes on. We understand. And charge them something if you want to, but allow them to leave without penalize them too heavily. Could you please share the rules you have on your lease for your tenants who smoke? Well, you can buy my lease, I suppose. But generally, I'm not a great fan of smokers. But some people smoke, and so what can I do about that? So all I advise is that they don't smoke inside the house, and I put that in the lease. No smoking inside the house, but it's okay to smoke outside of the house. So I think that's one of the clauses in my rental agreement. Again, you can buy my rental agreement online. Go to joeasamoah.com, www.joeasamoah.com. I'm not trying to sell it, but I have a pretty extensive lease, about 20 pages, I think. It's pretty good. What about investing in REITs? Those, since that's like combining both stocks and real estate, are REITs less volatile when compared to other stock classes? I don't really know too much about REITs. I know that there are stocks which invest in real estate. I know that. It's called Real Estate Investment Trusts. Okay, they do a lot of REITs own a lot of these commercial buildings and office buildings and things like that. They do blend stocks with real estate because they primarily invest in primarily invest in real estate. I don't own any REITs, not to my knowledge anyway, but I do own individual stocks, and I do own mutual funds, and obviously I own real estate as well. So I'm not an authority on REITs, so I'm not really a good person to advise you there whether they're good or bad. I just don't invest in them. So if anyone does, please let me know. Hey, Dr. Joe, your thoughts on using 401k and take the penalties and additional tax implications for an investment property? Oh, well, if you take money out early, out of your 401k or for your IRA, yeah, you're going to take a hit, and it can be quite big. I think the limit is like, if you're 59 and a half or above, then you don't take a hit. If you're 59 and a half or less, then you're subject to early withdrawal penalties, and also tax implications, because now income, and you're going to be taxed on that because the investment company has to report it to the IRS, and so on. So there are pretty heavy hits that you're going to take if you take out your 401k early. If you can, some employers don't allow it, and or you may have to take a loan on it, and so on. So again, I don't know your situation intimately, but there are definitely tax implications. If you can avoid these penalties, I think that'll be a good idea. But if you have no other choice, then you have to look at the return that you'll get, or you could get from from this compared to if you didn't take an early withdrawal and so on. Okay. Next one. Is it a good idea to rent a house on which you have a personal mortgage using an LLC? It's kind of a similar question, I think. Is it a good idea to rent a house on which you have a personal mortgage? I mean, I've got properties which is in my personal name, and I'm renting them out. It does. I mean, the important thing is to. I mean, I know the guru is always saying it's heresy, I suppose, to have a house in your personal name. Not necessarily. I mean, I have houses in my personal name. I have houses in my LLCs. And what I realize is that anybody can sue you, yes, but if you're a good landlord and you have good relationship with your tenants, generally people don't sue people they like. So I haven't had those bad experiences. I just haven't. Maybe because I treat my tenants well. I try to be a good landlord. And most people are reasonable. Most people are fair. And so if you're fair, then most people will be fair to you. Hopefully that helps. Amon? Okay. Again, if you got some questions, please put them in the chat box. I'm getting a little tired. Late night last night and early morning this morning. I'm working out at the gym. I was out there at 5 o'clock this morning, and it looks like the time is coming for me to wrap it up for the day. Amon, after attending your event with Femi, I'm more interested in Section 8, mainly the 6-bedroom route. Since I wasn't interested in Section 8 before this, what would be my next steps? What I would suggest, Amon, if you're interested in replicating what Femi's doing, I'm doing that right now with another couple, Corliss and Fitz, doing a house in Washington, D.C., where it was a 3-2, 3 bedrooms, 2 baths. We're turning into a 6-4, 6 bedroom, 4 baths, and they're going to rent it out to Section 8. Another student of mine, Charles, I think he's looking. Hopefully, Charles will get a ratified contract in the next few days. And he's going to do the same thing as well. Turn a 3-2, 3 bedroom, 2 bath into a 6-4, and then rent it out to Section 8. So if you're interested in that, I have the JV Wealth Builders program, JV Wealth Builders program. In fact, you can go to this website. Let's see if I can put it down here, www.jvwealthbuilders.com. Let's see if that will. Okay, so you could go to this website, www.jvwealthbuilders.com. You can learn more about the program. If you're interested, it's a highly, highly selective people. I'm not interested in working with a lot of people. So you have to qualify to get into this program. So if you want to be considered, go to this website, www.jvwealthbuilders.com. You'll get more information about the program there. And if you're interested, shoot me an email, and we can schedule a one-on-one to talk about it and see if it's a fit for you. It's a great program. It's really for people who want to take action. That's it. It's about getting the deal done. I have all the systems in place, finding the deals, getting the money, the contractors, Section 8, doing all that stuff. We've got it down pat. So if you want to actually take action and start buying stuff, not just watching videos or reading books, and actually, doing it, then this is the program for you. It's designed for the busy professional who wants to do this, but just busy. I'm an integral part of your team, and I'm doing a lot of the heavy lifting for you as you go on your real estate journey. Okay, let's have a look. jvwealthbuilders.com. I think I've done that one. And where to find the link for a one-on-one? Go to the website, www.joeasimo.com. And if you go there, then you want to go to, let's have a look. Yeah. So go to joeasimo.com, and there should be a link, ask Dr. Joe, ask Dr. Joe, and you should be able to book a one-on-one with me. If you're having difficulty, shoot me an email, and I'll send you the link, joe@joeasimo.com, joe@joeasimo.com, and I'll send you a link. Again, I'm not trying to sell the programs or sell any services. I'm just here to help you guys out. So if you feel I can be of assistance, let me know. and I'll do the best to help you. My goal, as I said before, is to make sure everyone improves success. And if I can be of assistance to you, I want to do that. Okay, it is now 7:52, 7:53, and I'm going to wrap it up for the day. I think I've had a long day, and I think I'll take it easy for the rest of the night. So again, I hope you had a good evening. Hope this was helpful. And so please, if I could be of assistance to you, feel free to reach out to me, either email, website, Dr. Joe, Ask Dr. Joe, and otherwise I'll see you next Wednesday on another Wealth Wednesday. Have yourself a wonderful evening and have yourself a wonderful weekend. Take care. Bye for now.